Hi everyone, Martin Bamford here, and this is your Money News Fix. 5 personal finance stories that are rocking the world of money this week. Everything you need to know in just a few minutes. Here we go. European stock markets opened lower on Monday with investor fears about a third wave of the COVID-19 pandemic on the continent and a growing row between the UK and European Union over access to the vaccine from AstraZeneca. The FTSE 100 index of leading UK company shares opened 0.79% lower, with the French CAC index down 0.87% and the German DAX down 0.51%. European Commission President Ursula von der Leyen last week threatened to stop the export of COVID vaccines to the UK unless Prime Minister Boris Johnson gave up British-made AstraZeneca doses to the EU. Von der Leyen said the EU could ban vaccine exports if AstraZeneca failed to meet its supply obligations to the EU, saying to German newspapers, "That is the message to AstraZeneca. You fulfill your contract with Europe before you start delivering to other countries." In response to the threat, Boris Johnson is expected to speak to his EU counterparts this week. The escalating row comes as the UK reached a milestone of more than half of the adult population receiving their first COVID vaccine dose. Half of UK workers experienced a pay cut in real terms in 2020, despite official figures showing the fastest wage growth in nearly 20 years. New research by think tank the Resolution Foundation shows that pay growth was weaker and more volatile than the official figures suggest. Its latest quarterly earnings outlook reported a median pay rise of 0.6% last autumn, which is just 0.2% after price inflation. Median pay rises rose to 1.8% in the final quarter of 2020, which is 1% in real terms, but still the second lowest real terms increase since mid-2013. According to the research, average weekly earnings were volatile due to widespread furloughing across the labour market. Official figures for nominal average weekly earnings growth came in at 4.5% last June, which was its highest rate of growth in nearly 2 decades, despite the largest economic contraction in more than 300 years. Hannah Slaughter, economist at the Resolution Foundation, said, "Sadly, the story of bumper pay packets from official headline data is too good to be true. In reality, half of all workers experienced a real terms pay cut last autumn, with pay growth deteriorating most among those who have been hit hardest by the pandemic, the young, the low paid, and those working in social sectors like hospitality. The government should prioritise getting young people's pay and careers back on track during the recovery, and that is likely to require further policy action beyond that announced in the budget." The COVID-19 pandemic is changing our property preferences, with Cornwall knocking London off the top spot for most searched home locations. That's according to property website Rightmove. Devon came in 3rd place, and Dorset rose from 20th to 10th place. According to Rightmove, rural or coastal living is becoming popular, driven by confidence in improving broadband connectivity and the attraction of more indoor and outdoor space. Tim Bannister, Director of Property Data at Rightmove, said, "More space has always been the most common reason for people moving home, but the evolution for many from balancing their laptop on the end of a bed last March to making an office a permanent addition to a home has led to a need for even bigger homes than before." The Competition and Markets Authority has told house builders Countryside and Taylor Wimpey to remove unfair contract terms for leaseholders or face the threat of legal action. According to the CMA, these unfair terms double ground rent every 10 to 15 years and effectively trap leaseholders in their property. In response, the builders said they have already taken steps to address the issue. Dr. Andrea Coselli, CMA Chief Executive, said these ground rent terms can make it impossible for people to sell or get a mortgage on their homes, meaning they find themselves trapped. This is unacceptable. Countryside and Taylor Wimpey must entirely remove all these terms from existing contracts to make sure that they are on the right side of the law. He added, "If these developers do not address our concerns, we will take further action, including through the courts if necessary." The CMA is also looking at leasehold terms from Barratt Developments and Persimmon Homes. The amount of cash we're taking out of ATMs fell by £37 billion since the onset of the pandemic. New data from Cash Machine Network operator Link found there were 43% fewer visits to cash points compared with a year earlier. Despite this fall in withdrawals, the average amount of cash withdrawn at each visit to an ATM rose from £67 to £84. Due to declining demand for cash, there are 4,000 fewer free ATMs now in operation in the the UK. Natalie Seeney chaired an independent review into access to cash, recently saying that cash refusal by retailers was creeping into the UK economy. Seeney said it is crucial to understand that cash remains vital for millions of people. Not everyone has a bank account and not everyone can use digital. Cash allows you to budget to the last penny. Fewer ATMs, bank branch closures and shops going cashless may be seen as progress to some, but there are still a lot of people out there where it makes life more difficult, expensive and uncertain. That was your money news fix. Don't forget to like, share, comment and subscribe. I'm Martin Bamford, and remember, when it comes to your money, the more you know, the faster it can grow.